What is up, guys? Luke here. First of all, I want to say thank you so much for all the love on the channel recently. You guys are amazing. And shout out to Main Yusuf for giving me some exposure. I want you guys to live your best life and to be successful, so I'm going to keep dropping good knowledge and good vibes to help make that happen. I've got a lot of great self-help material coming up, but in the meantime, I want to show you guys a great idea for a side hustle that you can do while you're quarantining. That is stock trading. Stock trading is going to be good at this point for three reasons. First, the market's in a frenzy right now, so there's a lot of opportunity. Secondly, you don't need to leave your house. All you need is a decent computer. And third, you don't need a lot of startup capital to get started. Before I get into it, I'll let you know this is for informational purposes. I'm not going to advise you to buy any specific investment, and I'm not going to tell you what you should do, only what works for me. Please do your research and practice with fake money first to get comfortable before putting any real money into it. All right. Here we go. The first thing you want to do is set up a direct investing account. I'm in Canada, so I use Questrade, but what I would suggest is just go on Google and find a brokerage firm that's in your area. I think in the States they don't have commissions on trades anymore, so that's pretty awesome. And then after that, just follow the directions on the website to open up the account and fund it. Okay, so now we want to find some good stocks to trade. So what you want to do is go to a stock screener. So I like finviz.com, so I'm going to show you that one. So there's a little tab at the top there, it says screener. Click on that. Let's just go to the filters and click on all. So now the first thing we want to do is make sure we're trading stocks that are highly liquid. And what that means is that people are trading them frequently. So to do that, you want to go to the average volume tab and click on over a million. Then we want to do the average true range. Average true range is pretty much an indicator of how much it goes up and down. So we want things to be fairly volatile. So we're going to do over 1. And then the last thing we want is to have the price be over $15 because there's no point trading penny stocks. That risk level I think is a little bit high. So let's do over 15. And then you want to click on the charts tab so you can see what type of patterns are forming in the charts. We also want to decide how long we're going to stay in the trade for. So is it going to be just intraday? Is it going to be a week? Is it going to be a month? Is it going to be longer? My forte is more in the couple weeks, could be a couple days, couple weeks to a month range. I'm going to start with the weekly chart, then I'm going to go down to the daily. I'm going to find the trend in the daily, and then I'm going to look for the actual places, the actual prices that I want to buy and sell at. I'm going to look for that in the hourly and in like the 15, 10, 5-minute charts. Okay, so I'm on FinViz. I'm on the screener tab. I got my average true range over 1, my average volume over a million, my price over $15. Clicked on the charts tab there. I'm going to click on candle and then weekly. So now I'm going to take a look at these stocks and see if I can find one that is either in a really solid uptrend or at the bottom of its range or both. So let's take a look at Boot. Boot looks like it's starting its uptrend there and it's at the bottom of the range. So the next thing we want to do is take a look at it in greater detail. Ideally, it'd be nice to have one of those advanced charting software platforms, but those can get expensive. So when you're starting out, a good resource is to go to freestockcharts.com. Okay, so the first thing we want to do now is take a look at the index. So Boot trades on the New York Stock Exchange, so it's the S&P 500 is the index. So we just want to make sure that the trend of the index is matching the stock, because if the trend of the index is going down, then the chances of the stock going up it's slim. It reduces the probability. How you figure out what an uptrend is, really all you got to do is just look for the higher highs and higher lows. Next thing we'll do is take a look at the actual stock. So I have a checklist of things I'd like to do before I place a trade. So the first thing I'm going to do is take a look at the bigger time frame, the weekly chart, and I'm going to figure out what range it's trading in. So to do that, I take the current price, I trace my line up to the origin of the last big drop.
So I mean, I know this looks like a massive drop, but there was a bit of a bump up here. So you can see like the line went up here and then retrace back down. So I'm going to use that as the top part. And then I'm going to do the opposite. I'm going to go down to the bottom and find out what the origin of the last big rally was. So that looks like it's here. So this is the range I'm at. So ideally I want the current price to be at the bottom, and it's not at the bottom right now. It's somewhere in the middle, which is okay. It's not ideal, but it's okay. If it was at the top, I would probably just scrap this trade, but it's in the lower half of the middle. So let's continue. The next thing I'm going to do is check out the trend. So I'm going to go to the daily chart for that. So you can see it is in an uptrend right now. There was a low, and then there was a higher low, and then here there was a higher high than here. So uptrend. And now I'm going to find a good place to buy the stock at. So we're going to go to the even lower time frame for that. So we'll go to the hourly. The first thing I look at is I try to find the highest high that it just broke out of, which is this area. So I'm gonna put my cursor there, and then I'm gonna find the most recent low, which is this area. I'll put my cursor there. So I'm gonna find a place in this range somewhere. So within the range, I'm gonna look for a level that has a big explosive up move in price. So I'm liking this level right here. So I'm gonna put my cursors around that. And now I'm gonna grade this zone that I've made with 4 criteria. One is going to be how explosive the up move was above it, whether it broke through this area right here. So you can see that the move is pretty explosive. It's more than twice the size of this zone, so that's pretty good. And also it did break through this last high, so that is also good. Next is how long it took to actually get out of that zone. So I want it to be a situation where it just touches it, and then people say the price is too low, so it explodes back up. You know, ideally 1 to 3 candles would be good. So this one, in this actual zone, it had 1, so that's pretty good. If you go to the lower time frame charts, you can see it had a lot more, but I'm going to look at it through the hourly one because this trade might go on for a couple weeks, so I'm going to give that a check mark. The next thing I'm going to look at is whether it touched the zone already, because if it did, the chances of it hitting it again and exploding back up is a lot less. But you can see that it was at this zone there, and then it hasn't hit it again, so another check mark. So the last thing I want to decide is whether there's going to be enough profit in this trade for me. Trading is all about risk management. No one is going to be right 100% of the time, and no one's going to be right even a majority of the time. No one has the ability to predict the future. All you can do is make educated guesses and try to stack the odds in your favor as much as you can. And the biggest way you can do that is to set it up so that if you're wrong, you lose only a small amount of money, and if you're right, you gain a large amount of money. This way I could do 10 trades and I could be eight of them I could be wrong, and I could maybe lose $50 on all the wrong trades. But then if I make $500 on the trades that I'm good at, I'm already up a lot. With this trade, what I'm going to do is I'm going to maybe take my entry price and I'm going to put it at 15.15. So I have a tracker here that I use, and it helps calculate for me what the profitability is going to be like. Potentially I could be losing $4,500. I don't know about you, but I don't have $4,500 to lose. So I'm going to place what's called a stop, which is essentially a way of me getting out of the trade if the market proves that I'm wrong. So I think a good place to put my stop would be 1470. It's going to be just under this zone and give it enough leeway just in case things bounce down a little bit and go up. I think 1470 is a good place to cut my losses. The only money that I actually have at risk if I put my stop at 1470 is going to be $135. I'm going to find a good place now that I can put my target price at. Essentially what you want to do is you want to look to the price history and find a place where there was a huge drop in price, because chances are once it gets to that level, it's going to drop back down. So I think this is a pretty solid place right here. There's a couple other ones, but it's already kind of at the level of the other ones. You can see here. It's already kind of reached this one. So there's one right there, and there's a nice big one right here. So I'm gonna go for this one. If I put it at this one, there might be a little less money that I'll make, but there's a bigger chance, obviously, that it's going to get to that level than this one. I like this one because it's a pretty defined area. So let's go for that and we'll see what happens. So I'm just gonna put my exit price a little bit underneath it, because if it gets into that, it might actually not make it to that zone, because it might turn around before then. So let's put my target price at 1920, we'll say. So now you can see that there's a ratio of 9 to 1. So I'm only going to be risking $135, whereas I could potentially make $1,200. I think that's a pretty good deal. Okay, so last thing I'm going to do is place my trade. I'm only showing part of my screen here for privacy purposes. And then how you want to enter the order, the way I was showing you guys, you want to click on the bracket order tab, and there's going to be a section for the profit limit. So I'm going to put my 1920 there, and there's going to be a section for the stop loss. So I'm going to put my 1470 there, and there too. Okay, so now I'm going to press buy. It's going to give me some disclosures. I'll press yes. It's going to show me all of this margin stuff. Again, I'm only going to be risking the $135 that I was showing you before because of that stop loss. So I'll press send order, and there you go.
So all I gotta do now is wait for this thing to hit. We'll see what happens, and I'll catch up with you guys then.
A few days have gone by and some interesting things have happened. The morning after I placed the trade order, I woke up before the market opened, and I noticed the stock was actually trading below my order price. So I readjusted my order price as well as my stop, and when the market opened, I actually got into the trade at 1488. And it bounced around a little bit. A few days went by, and I could tell that it was really having a lot of issues getting past this point, even though the market was going up considerably. And that's a pretty bad sign. So if the market as a whole, like the S&P 500, is going up considerably, but the stock that you're trying to get a profit from is not going up, it's not a good sign. So what I ended up doing is I just got out at $15 when it hit $15 a couple days later. And I think today, looking at the markets, that was actually a good move, because the market had a bit of a dip at the end of the day, and you can see it actually caused the stock to go down to the lower zone that I had marked here. So even if I hadn't done some stuff on the fly there and just stuck to my plan, I would have lost the money that I was planning to lose if I was wrong. You know, now I can just move on. So perfect example of risk management. This one was a dud. Let's move on to another one.
The next opportunity that's come up is from a company that I heard about on the news and that has a potential treatment for coronavirus. I am praying and hoping that we find one soon and that this pandemic is short-lived. But as a trader, I'm gauging the emotional reactions of the market and seeing whether they're warranted or not. In the case of Gilead Resources, after they had some positive results on a drug that they were developing and it came out in the news, the stock price soared to a level that is assuming that they've already proved that they have the cure and that they will profit from it immensely. After looking into the situation, I have found they have not completed clinical trials yet, and even if they are found to have an effective treatment, there's a lot of uncertainty that they will profit from it the way that people are assuming with the stock price. Because of this, I think people are emotionally overreacting and getting a bit ahead of themselves. Therefore, the stock is overbought, and I think this is a good shorting opportunity.
I've analyzed this trade the same way I did with the last one. So I started with my overall range. I have the upper part, the lower part. You can see the stock price is pretty close to the upper part of the range, which is a good sign. Then I go to the daily chart, look at the trend, and you can see it's sideways trending right now. It'd be nice if it was downwards trending, but because it's jumped so far in such a short period of time, I think that's okay. Then I go to the hourly chart to look at the places I want to buy and sell the stock. You can see when that news came out that day, it jumped all the way up to this zone right here, and this is a mark of a good place to sell the stock. So that's what I did. At 85.09 is where I got in. So I managed to get it even a bit above the zone. I put my target price in this demand zone right there. I don't want to bet against the company. I think the company is good and they're doing good work. The overreaction in the market is what I want to take advantage of. So I think if it goes back down to the normal zone here, it would be a good trade, and I think it's a good probability of it doing that. And then I placed my stop above this zone right up here. So on my tracker, I put all the stats in. I traded 50 shares. I did it at 85.09. I put my stop in at 86.46 and my target price at 75.40. So you can see it's a 7-to-1 ratio, which is good. And Worst case scenario, I'm wrong. I lose $68.50. But if it reaches my target price, I get $484.50.
So let's see what happens.
It's been a week since I made the trade. The price has been going up and down by small amounts, but not much has happened until today when this came out. I'm sad that we haven't had a breakthrough on the treatment for COVID yet, and I'm wishing every day that we can find one and stop the pandemic. However, this is a good lesson in market psychology and the things to look out for as a stock trader. It's not very common for a drug to pass clinical trials. So when a stock surges on the possibility a drug could be effective before it actually goes to clinical trials, there is a very big probability of disappointment and a collapse in the stock price, and that's what happened here. So you can see over the last week the stock has been wavering up and down a little bit as the market's been going up and down. And right here, that's when the news broke out, and you can see it just collapsed right down to the original price range it was trading at before the original news came out. So once I saw that the clinical trials had been a failure, I actually moved my buyback price down to the bottom of this range. I ended up getting out at 74.84, and you can see that it just kissed it, it just touched it briefly, and then it went back up. So all in all, a really good trade. So you can see when I originally shorted it on the 17th of April, 85.09, 50 shares, and then moved to the 23rd. You can see covered the 50 shares today at 74.84. Now I'll complete my tracker. Profit was $512.50. Not bad.
There you go. So I hope you guys enjoyed the video, that you learned something or that you were inspired. The silver lining to everything that's happening right now is there's going to be a lot of change coming up in our society and our economy, and that means opportunity. So it's really the time more than ever for you guys to focus on what you want to be doing, on what your passions are, and start pursuing them. I was able to show you one of mine today, and it's a perfect example of how you can make money on your computer at home. I know I went through the analysis rather quickly, so if you guys have any questions at all, please leave them below. Otherwise, comment, like, subscribe, all that fun stuff, and I'll see you guys soon for some more great insights. Until then, do what makes you strong, stop doing what makes you weak.